Shares in Asia are tumbling this morning as investors fear mainland China's COVID situations may be worsening. Beijing City has suspended offline sports events, delayed return to school, and tightened other controls only days after loosening them. As a consequence, this morning, Hong Kong's Hang Seng is down more than 3%, and so is the Kospi in South Korea and the Nikkei in Japan. The yen has also touched its lowest level in 24 years as the dollar keeps climbing. Investors are keeping a very close eye on the Fed, which is expected to announce its interest rate decision later this week. And this comes after a hotter than expected US inflation number on Friday, worrying investors across the globe. For more on this, let's now bring in Naeem Aslam, who is Avatrade Chief Market Analyst in London. Naeem, many thanks for being with us this morning. First of all, it seems as the global exodus from stocks, but also bonds, is intensifying, and especially in Asia. So what is driving this in Asia particularly? What's weighing more?
Sure, thanks for having me. Look, I think you've answered the question earlier by mentioning two important factors, which are very much driving the price action today and are likely to be the key factor for the market price action, for the market's price action. So firstly, of course, is the CPI reading, which came on Friday for the US at 4 decades high. So for when investors and traders are looking at, they're seeing that, okay, CPI is running at 4 decade high, and we still haven't reached peak, let alone when the CPI or inflation will begin to go back to its normal level. Secondly, we had the consumer confidence data, right, which flirted with a reading of 50 in the United States. But remember, the US is the biggest economy in the world. So if situation, it has a much bigger ripple effect. And if situation is becoming worse over there, we are going to see much bigger implications everywhere else. Finally, something that traders are also anxious about is the two important meetings that are going to be taking place this week, and that is the FOMC and the Bank of England's monetary policy meeting.
Absolutely, ripple effects from the US. And I guess, Naeem, now the question on everybody's lips really is, what do you expect from the Fed's meeting this week and the rest of the year? I mean, is it 250 basis points increase possible and then a potential 75% increase? Is that too much?
I think 75 is still on the speculation side. I think the Federal Reserve doesn't want it to surprise the market with a 75% interest rate hike. We believe it is more likely going to be in line with the 50 basis point interest rate hike, something that they have talked about previously as well. And that is going to be the scenario, at least for this particular meeting. Yes, for the upcoming meetings, we could see that. But what is even more important, not the interest rate hike on this on Wednesday coming this week, but actually the tone of the Federal Reserve and how do they see the interest rate moving forward from here onwards.
So we'll keep a close eye on that. Jerome Powell has said last week some pain will be necessary. Many thanks for being with us.
Thank you.